Morning, folks. Let's look at natural gas quickly. There's quite a lot of movement, a lot of things going on. So I want to just keep you updated of what my latest trade entry is. You probably know that I was short on the continuous contract here at Pepperstone at around about 4.4. And we exited there yesterday, actually just taking some profit. I wasn't going to, but I reversed. And we're now long, but with a very tight stop loss, just below that swing low, which is at 397. And my hedge level is at 396. We're currently trading at $4.10, having got as high as $4.13 a little earlier. I'm going to try for a reach up to about $4.18.19. That's where the 20-period moving average is. And then maybe a move all the way back up to this previous swing high, closer to 4.5, and then potentially higher. Let's go to the day chart here at Pepperstone. That's where we are. There's the weekend gap. We took profit at the bottom yesterday, and we're now long from roughly the same price level. The swing high is at 4.57, and I'm in on this on the continuous contract at Pepperstone, but not the futures. Now, the futures are rolling over on Wednesday. That's tomorrow. This is the black bull chart of the futures market, the Henry Hub price, and you can see we're just curling up there as well. There's the 20. There's the previous swing high at 4.46, 4.47 as well. If we go to the daily chart, let's just zoom out and have a look at this. You can see we could reach up even higher. My initial target was at 4.8. We may still get there. That's this previous swing low. And there are various other targets. There's another swing high and low at about 5.4, and then a couple above that. I don't know if we're going to get that high, if we've got any chance of getting that high. I have no clue. Let's have a look at the futures at the NYMEX, the Henry Hub price, and there you can see, pretty similar actually. There's my original green arrow moving up from there, up to this top and then down again. So we took the long and we took the short, but I've now truncated that short and changed to long again. Now, of course, if we fail to hold here, there are many levels below us, starting at all these moving averages. But my favorites are 3.75, $3, 275, 250, and maybe we'll even get below that. I don't know. But for now, I'm going with a long position. And you can see some of my targets drawn up here in the red lines. And you can also see some of the Fibonacci levels. There's the 38% retracement level and that previous swing low that I spoke about earlier at around, well, just under $5 really. And then there's a couple up above us as well. If we look at the COT report and the futures stack here at barchart.com, you can see that we're trading well above the seasonal average, which is a warning sign, of course, for the long side. But when we look at the commitment of traders, the commercials are weighted to the long side, adding more to the long side. Producers adding more to the long side too, although slightly weighted short. Managed money much more on the long side and adding more to the long side, considerably more. Non-commercials remain weighted to the short side and adding roughly the same to each side. Perhaps there are some hedges in there. Even the swap dealers are long, and you'd expect the market to sort of aim downwards if that was the case, but not to be. And then other reportables, look at these. Retail traders, 32,000 long, 231 short, and adding much more to the short side. So are these retail traders, other reportables, going to actually swing the market? Look at the size of their short positions in comparison to some of the others, and we've got a massive chunk of retail traders taking the short side. As I often say, it's often better to go in the opposite direction of the retail traders, and they're seriously, seriously long right now. So back to the charts, just a reminder that the contract switches tomorrow. We're switching from the March contract to the April contract on Wednesday, that's tomorrow, and switching very quickly back to the trade position that we're in and changing it to the 4-hour chart. You can see we're just ticking up ever so gradually, ever so slightly, but at least we're in the right direction, even though it's not moving very fast. Be very careful at the underside of this gap here at 4.28, and then also watch what happens at the top here if we do get there at around 4.5. Well, I hope you enjoy that, folks. By the way, I'm releasing a natural gas trading course in March, just a few weeks' time. And if you'd like to make sure that you get in early and that you don't miss out on getting a copy and that you're eligible for any discounts that may come along, make sure you subscribe to this channel and go and check out the links below. Take care.
Woke up this morning, checked my screen, red numbers flashing, looking real mean. Dow done dived, S&P in pain, NASDAQ sliding like a runaway train. Boss man sweating, brokers cry, bears got the market in a big old vice. I poured me coffee, took one sip, looked at my stocks, nearly lost my grip. Ooh, it's free fall Friday.